Welcome to the daily update. This is being prepared Wednesday, April 13th, where we'll look at the action in the market today and then see how things look for Thursday, April 14th. It should probably not be a real surprise that we saw a bounce on Wednesday. At least on a short-term basis, we were becoming oversold, and I even addressed that in yesterday's video. So when things came out a little more positive, we saw some people coming in and buying, took prices higher. That it's really kind of what we were expecting. We usually don't always know when these things will happen, but this was kind of a textbook example that we had fallen pretty far pretty fast. So people that are short the market right now, they want to lock in some profits. People that are looking to get in long, they think that this is okay, a dip that we can buy. So they look to get in at lower prices, hoping for things to go higher. The big question now is, can we continue? We've improved a little bit on a short-term basis, but things are still negative across the board. So let's go back and recap what happened on Wednesday. We did have a gap higher open. And then after the initial gyration, which usually happens right after the open, you have some ups and downs and things that can last anywhere from usually 60 to 90 minutes. Sometimes, of course, that's not a real hard and fast rule. Sometimes it can get over with during the first 30 minutes, and then the rest of the day goes where it wants to go. Other days, it might gyrate even a little bit longer. But I usually look at the first hour to an hour and a half when the market's open. And prices continue to go up above the daily pivot. So that was positive. Now we had a more positive flare to the day. And then as the day went on, we continued all the way up to R1. So that's even more positive. We closed just a little bit off the high. There was some selling going into the close, but not a huge deal. So it ended up being a good solid day where we were up 1.12%. We're still below average and declining with our volume. So that's another thing on an up day to be suspicious about or suspicious of. When we see declines or advances with declining volume, we don't put as much importance into it. Now, all price movement is important, but we just want to keep an eye on this because price shows us, of course, the direction, but volume shows us the intensity and how much conviction there is behind what's actually happening. Our technicals are still pretty much negative. The big concern right now is inflation and interest rates. That's the top scenario that the markets are fixated on. And then, of course, the other geopolitical concerns that at any time could come to the forefront. So what are some comments that we can make? The technicals are still negative, but we did regain the 50 simple moving average for the S&P, as well as the 200-day exponential moving average. So that's positive. And the thing is, can we get above some of the other moving averages now? I'm treating this as a short-term oversold bounce. Okay, there's not any, well, there is some evidence that we might see some kind of a move up from here, but we need the technical picture to really improve first, at least by the way I look at things. The interest rates, when they're going up, that has a real impact, especially on growth stocks. Growth stocks are what makes the market really go higher. Well, they were more under control on Wednesday, so growth stocks had a little bit of room to run to the upside. The yield curves continue to no longer be inverted, and the dollar, it actually declined, which could have helped growth stocks go up a little bit. The dollar's been pretty strong lately. And when you have the dollar going down, you have interest rates under control. That gave the opportunity then for growth stocks to enjoy a little bit of upside movement. The interesting thing, though, is sentiment is not moving. They seem to be updating the chart at CNN Money, but we're getting the same reading day after day. The economic report that came out was the PPI. CPI came out earlier, and that's what consumers, that's what we, when we go to the grocery store, that's what we pay. Well, producer price index, that's the people that make the things that we go to the store to buy. that's what they have to pay. And the logical conclusion is if they have to pay more to produce products, then eventually we will have to pay more when we go to buy those things. Well, according to the report that we have, this is the highest number that's ever been recorded. Some could say, all right, well, that's just showing growth. But at the same time, that kind of feeds in more to the inflation scenario. And I have a chart of the PPI that I'll show you here. The ADX is still showing us a trendless environment. And even though we had the up day, I'm still kind of leaning more towards negative for a bias. I know usually up day, positive, down day, negative, because I just see this as a short-term bounce right now. Now, if we see some follow-through action, I will switch that back over. But right now, it just seemed like a bounce to me that might not be able to have sustaining power. I could be wrong, but I want some more evidence before I actually have a stance on this. Momentum is still negative too. We've been down much more than we've been up over the last 2, 3, 4, 5 trading sessions. So let's go back, look at the daily session. This is it. We were at 46 2 days ago. We were at 46 yesterday. We're at 46 right now. So, and if you look down here, it was updated on April 13th. So they are updating this thing, but it's not moving. It's like our speedometer is stuck right now. And so even with an update, we should have seen this tilt a little bit more to the right, but we didn't see that. And then the update on the previous day, we probably should have seen this go lower. It didn't. So it's just in neutral territory right now. And then this just gives us the overall reading right here. The VIX actually declined a little bit because we had an up day, but we're still above 20 on a closing basis. And we might, again, yesterday I pointed out that we're seeing a kind of a series of higher highs and higher lows with the VIX. Well, we broke down below that. Now we could have a really strong down day on Thursday, and this could shoot back up and kind of resume that higher high, higher low look. But right now we did see a decrease in the VIX. And then here's the VIX of the VIX also showed a decline, looking at the bar chart as well as on a closing basis. The Ulcer index, again, it's continuing to climb. So this, we just want to keep an eye on this. As fear comes into the market, this indicator will continue to climb. Our sectors, I think there's 10 out of the 11 were positive, with discretionaries leading the way higher. It's a really weak sector group right now, but they had a good day on Wednesday. Tech also showed a little bit of a bounce back up. Energy, which has been doing quite well. The financial sector was pretty much unchanged, and then utilities were down just a little bit, but they've been one of the more stronger sectors that we've seen in 2022. Here we go back to looking at energy, which is how it's performed since the all-time high. It's still in first place, followed by utilities. Staples had a little bit of a bounce on Wednesday. Then over at the other end, discretionary, even though it was strong, it's still performing the worst as far as our sectors, with tech and then communications really taking up the rear. Financials are running into a little bit of problems with the banks and things right now, but they're just not down as much as some of the other sectors. Here's our tech chart, looking at the tech sector where it was up 1.61%, but that's just a little bump up if you look at this in a bigger picture. And then looking at the SOX index, it was up over 2%. Again, was this just a bounce after going down pretty far, pretty fast? We really don't know that at this point, and I have to cough. I should be getting my new equipment to have access to my better microphone here either today or tomorrow. As far as inflation, this is the PPI, the Producer Price Index. This is a chart that I found, and this just shows how we've really been increasing. The maroon line this is the total. PPI. And then for some reason, it's like, okay, yeah, inflation's not that bad if you take out food and gas. And, it's like saying, okay, I'm a Seattle Mariners fan. And it's like they would have gone undefeated if you take out all the games they lost. It doesn't make a lot of sense, because the things that we need to live that's what we're dealing with every day, not only on a consumer level, but on a producer level as well. But they just want to make things sound a little bit better than they really are. But you can see here that we're up well over 11% with the PPI. This is the 12-month percent change in how we've been climbing for right now. So this also really plays into the inflation scenario, but it didn't really freak out the markets that much, because they've kind of already figured this out. And so they priced a lot of this sentiment into the market already. And then the CRB was up 1.76% and continues in a really strong uptrend. This just shows how the commodities have been really outperforming stocks. And a lot of these, I say the same thing every time we see these, but we need to look at these so that we build this picture that we're constantly looking at and adjusting here and there, so that we can get a real feel for what's going on in the market. We focus on the S&P 500, but we need to look at lots of other things that then influence how the S&P performs, and then what kind of strategies we can then implement. And if you hear a cat in the background, he's trying to say hello. Our technical alerts, some positive, some negative. We had a BPI crossover or cross above 50 with the tech sector. So that's been going up a bit. Healthcare, this dropped below 50. Healthcare also had a bearish MACD crossover. The euro set a 52-week low. The dollar had been higher. It was near the end of the session when it came back down under 100. The S&P was able to get back above 4,400. Then the NASDAQ, 13.4, then 13.5, 13.6. Real estate also has a bearish MACD crossover. So some of the areas that have been weak continue to show weakness, but then other areas are starting to show, at least with our technical alerts, a little bit of strength. But is this going to be more than just one day? So let's look at what happened. We did gap up right here at the open, and we gyrated around a little bit higher, a little bit lower. We went all the way back down to the unchanged level, and then boom, we were to get back above the daily pivot. That's this more solid line here. And I know I get these mixed up because the R and the S and the pivot, they go away after the session. I may add those as labels onto these charts just to get better reference. But we climbed above the pivot, and then we went all the way up to R1, and that was the high. And then this is the little bit of selling that I was talking about right at the end. So we're up 1.12%. This was, well, not quite as positive as Tuesday was negative, because the range was bigger, but still, this looked like a good, healthy advance. Here's our daily chart. We were able to get back above the pivot. That's kind of the main positive point, at least on this chart, but you can see down here where volume did decline on an up day. We're down 7.3% from the all-time high currently. We saw a little bit of a bounce in growth, a little bit of decline in value. Here's our growth versus value index, which shows the little turn up with growth, but value has really been outperforming, which we see more in this chart, where the value is rising higher. And then here is the NASDAQ 100, bounced a little bit in comparison to the S&P. Here's our pure value index, where it was up 0.85%, but our growth index was up 1.92%. So both of those were up. It just growth outperformed on Wednesday. And then this is just a ratio between the two indexes, showing that growth has been really underperforming value. And then This is also a couple of ETFs that I take the ratio between the two, which shows the same thing, how growth has really been underperforming. As far as our trend, the ADX, even though it's sideways, it's still below 20 and has not crossed the moving average. Even though the red line came down a little bit, it's still on top. So we have to default to the negative trend. The Arun, this is kind of acting a little strange. Even with the update, we saw a decrease in buying power and an increase in selling pressure. It might be picking up some of these previous bars in its calculation. And our oscillator actually turned down a little bit. It'd been flatlining here for quite a while, but we saw the little blip down after Wednesday. The change that was made yesterday was that the PMO short-term signal has now crossed over negative. And then as far as our breadth, saw a little bit of an uptick based on price, a little bit of an uptick based on volume. The advanced decline ratio was able to get back above 0, but this is not a monster move right here. New highs, new lows continue to trend lower. The accumulation distribution with the update that added it as positive volume, and we so far have been able to bounce up a little bit off of the moving average. Short term, we're still below the 20 period moving average. But the 20 period moving average averages inside the S&P, they upticked a little bit. So did the 50 and so did the 200. Then here's our spaghetti chart. And just to kind of wade through this whole mess, we got back above the 200-day exponential moving average. And then we got above the 50 period moving average. Those were the more positive things. There's still a whole mess of moving averages still above where we're at right now. But this, if we're really going to bounce up out of this, it's a start. Or this could act as resistance if we bump in to some of these moving averages and then get set to go lower. The MACD continues to be negative. The STO turned up slightly based on price and volume. So that's kind of wearing on. This STO means short-term oscillator. So that's why we're not surprised that this turned up slightly. And the McClellan oscillator is just barely positive right now, less than a point positive. The stochastic RSI is coming off of an extreme oversold reading, as is the Williams percent R. It's already given us an oversold indication. The force index, it's still negative, but did show some improvement. And let's see, yeah, right where I have my cursor. It's a little harder chart to read. You have to look at the numbers over here on the side to see what the closing value was. And then I just wanted to show this with the 5-day rate of change. After being extreme, we're bouncing up off of that. Then our intermediate term, we're starting to mess around with the 50 period moving averages. We got back above the simple. We still have the exponential still above where we're at right now. The 100-day moving average, we're not getting close to getting back to that, but we are just slightly above the pivot level. Here's the PMO study. This is still negative based on price and volume. PMO study, a little bit of a bounce with those that are rising, the PMOs that are rising inside the S&P, little bit of a decline with those that are giving buy signals, and we continue to decline with those that are above 0. The BPI actually declined a little bit. It's just a little tick of a bar right there, but we had an update, but the BPI continued to decline. That's why I'm saying, personally, I need more evidence to see that there's something real going on here, because it's just not showing up in our charts all that much. And then here's the longer term look at the BPI. We're still trying to come back up into the rainbow. And that cat is just making a real mess. I'm going to have to pause this and see what he's doing. I'm sorry about that, folks. Let's see. The cat is now in the same room where I'm recording. So let's see if he wants to say hello to everybody where you can hear him a little better. Looking at our stochastics, we've bounced after giving an extreme negative reading. Here, we're turning up just a little bit with the more intermediate term stochastics, but we're still heading lower with the full or longer term stochastics. The summation index even though it was slightly positive for the McClellan oscillator, it's just barely starting to turn back up. You can barely see that, but we're still continuing to decline based on volume. Pretty much all of our oscillators, if they haven't crossed over negative, they are really weakening. I think this one is not quite crossed right now, but the other ones are looking a lot more weak right now. The CCI, this is more of an intermediate term indicator, but since I base it on 14 periods, it gives us overbought and oversold readings much quicker. It's trying to bounce back up after giving an oversold indication. And then here's the rate of change going back 10 days. We came all the way down to this pink line and we're bouncing off of that. And if you look back here and you look at the S&P up above and you look at some points where we went extreme, sometimes like right here, this did not mark a top. We just kept blowing higher after that. But there are other times when this did mark either a top or that we're getting close to a top. Sometimes this can mark a bottom as well. So that's why I use a lot of different calculation methods for the rate of change, because some of them can be helpful and some of them really don't help us that much at all. The vortex continues to be negative with the red line above and going higher. We saw a little bit of an upturn with the green line. The RSI is trying to turn back up to go above 50 with the 14 period. The 9 period also turned up, but is still under 50. Different trading systems went back to neutral with the S&P, and the SPY, that is back neutral now. SAR continues to be negative with the dots on top. Our different charts, Heiken Ashi continues to be negative. Kegi continues to be negative. Renko continues to be negative. 3-line break continues to be negative. And we're seeing at least a green candle for Wednesday session, but a lot of red candles more overall. Point and figure, this is still the same potential pattern that it picked up, that this could be a high pull warning where the X is right in here. That's the high pull. We added another 0 after Tuesday's session. Well, that 0 is now drawn in, but there was nothing new that was added after Wednesday's session. Long term, we still remain below the 200-day simple moving average. It's right now at 44.94, where we're at 44.46. And here's the logarithmic chart as well. The mega stocks, they were up 1.82%. These are not the FANG stocks. These are just the big cap stock, the really gigantic companies. Now, a lot of them happen to be tech, but it's more on what their value is, not so much what they do. But it saw a little bit of a bounce. And then this is a little more concerning. Our special K starting to roll over. So we'll, again, keep an eye on that, but it can dance around. It can go higher and lower as things move around. Our longer term moving average study saw a bounce with the 50, a little bit of an uptick with the 150, and a little bit of an uptick with the 200. And then we're coming right back down into the 38.2, where we fell below that on the Fibonacci retracement. Well, we were able to get slightly above that on Wednesday. Looking at the broad market here, the S&P, this is just showing 3 days of treadmill activity. Mid caps, more than 3 days, more treadmill action. And small caps, also treadmill action, but closing at least a little bit higher. Then Dow Jones Composite up a little bit and is right about at the moving average. And the moving averages are even very close to each other. This also is indicating a real indecisive market. This is taking the Dow, the transports, and the utilities together. And when they're flatlining with their moving average and the price is right at the moving average, that really just shows you the market doesn't really know what it wants to do right now. Here's the Dow Theory, where we've been watching the transports right here. They did have a bit of a bounce up. So we've seen 2 positive days now for the transports, but we want to keep an eye on this. Here's the FANG stocks. They were up over 2%. And ARC was up over 3%. So, a lot of the growth stocks, we're seeing some recovery. This is a little more positive for the Dow. We've been able to hold up above the pivot, and we are back above the 50-period moving average. Can the Dow get back to the 200-day moving average? That would be even more positive. With the diamonds, we are now green. It switched from being negative all the way back over to positive. And small caps, kind of near the high end of this recent range that we've been in, but we've been able to stay above S1. We still have other moving averages, a pivot level, and the 200-day moving average still above where we're at right now. Mid caps also came right back up to their 50-period moving average. So that's in the scenarios when I say moving averages can act as either support or resistance. I'm not just talking about the S&P. I'm also including other indexes. The NASDAQ also was up over 2%, but still has a lot of damage to repair if things are going to improve. And volume even declined on the NASDAQ. It was below average and lower than it had been on Tuesday. NASDAQ 100 also has some work to do if things are going to improve. The Vixen actually declined for the NASDAQ 100, as could be expected. We saw almost a 2% gain in the NASDAQ 100, so it's not surprising that this fell. And then with the Qs, we're actually back into more neutral now with the blue bar. The NYSE, this is holding up a little better, and this is giving some hope. The pivot is acting as support, as is the 50-day moving average. But we want to see prices really go up from here if the picture is going to improve. The S&P 100 just barely outperformed the rest of the S&P 500. And here's the Wilshire, also staying right above the pivot, and was able to close back above the 50-period moving average. And we're starting, China's kind of in its own little world here. They're not a big player as far as influencing the US market, and so unless something really severe happens, either positive or negative. But we're starting to see a lot of these indicators roll over, with the S&P also rolling over. And the all stocks had a nice little rebound, 1.21%, but has not been able to get back to the 50-period moving average on a decrease in volume. Then the non-US stocks, they were actually down a little bit. So let's look at some of the other broad market measures here. The dollar had gone above 100. Well, it just closed right below 100. And here is the weekly chart thus far. Oil back up over 100, closed at 104.25. Gold up 0.44%. That's at least on the futures contract. Here's the ETF. It was all up almost 0.5%. Could this be some kind of a trend? Gold has been seeing a little nice advance when you look at the ETF. And then here's just a longer term view of the gold ETF. Silver, same thing, kind of really starting to go up, but we've seen this before. This was really healthy looking back into February, into the middle of March. Man, it just looked like silver was going to town. And then it spiked up, came down, and we've been just chopping all around ever since. And then here's the longer term view of that ETF. Bitcoin actually fell a little bit below 40, but was able to get back slightly above 40 on Wednesday. And when I checked, I think we're back up into about 41 or so now in the overnight session. Here's the different yield curves. And if you look closely at these, you'll notice that none of them are inverted any longer. And then that's kind of the positive backdrop that we potentially could be looking at after we come out of an inverted situation. Oftentimes we see a really strong move. Doesn't last very long, because when we see this shooting up, that usually takes us into a recession of one sort or another. But some really big gains can be made during this time after we see the inversion and before we go into a recession. So we're waiting to see if that's going to happen. Then here's the fib retracement on the 30-year yield. We're coming back up to the 61.8 level. We're just 100th of a point below that right now. And our treasury yields are just kind of dancing around, but overall they did decline, but they're still pretty bunched together, which is showing us part of our inverted yield curve that we recently saw. However, internationally, we are seeing a real spike up in interest rates. Bonds based on price, had a little bit of a bounce on Wednesday. Corporate bonds still saw a decline, with the current interest rate getting up to 3.75%. Junk bonds were up because the market was up right now. And I'm doing some studies about this. I've been looking at some charts to kind of compare junk bonds with non-junk bonds, which would be government bonds, and just to compare how they act and what their relationship is in between them. I may do something about that on the weekend video. And then here's the current rate, the effective rate or yield for junk bonds at 6.37. Relative studies. Are we seeing another attempt at a breakout of gold when compared to the S&P? We've already been seeing a breakout with energy, and that still seems to be holding up. And then when we compare energy with tech, those are both, energy is really going up. Tech is showing a lot of weakness. So that just shows that energy has been outperforming. And then here we're looking at growth against bonds. Growth has been having trouble. Bond prices have been having trouble. So we were up 1.69%, but we're pretty much chopping sideways right now. And then here is tech against the S&P. Saw a bit of a bounce, but a lot of damage has been done thus far. And then here is tech against the 10-year yield, a little bit of a bounce. Tech was up, interest rates were down. So that's why we saw a little, well, here it's a 3.05% move, but on this chart, it just looks like a little tick. And then here's the other correlation chart that we're watching for between the 10-year yield, the dotted red line, and oil prices. And it's still showing a very strong inverse relationship. Interest rates go down, tech goes up. And then the inverse of that is also true. And then looking at the 10-year yield against the tech sector, it's just showing that yields have been outperforming tech. And then discretionary compared to staples. We saw a nice little bounce in the discretionaries on Wednesday and a little bit of weakness with the staples. And then the S&P continues to really struggle because of the rise in interest rates. So it's really underperforming. And then here's the low volatile stocks. They were up 0.21%. And then here just shows how the low volatility stocks have really outperformed the growth stocks for pretty much all of 2022. I wanted to show this because this is a chart that I show periodically. We don't really know. That's why you see the question mark on here. Staples has had a pretty good run up. And if we look back, other times when staples topped out, a lot of times that marked a bottom in the S&P. And the run up that we saw in the middle of March going up here, that's what came after staples had really spiked up. Well, we're seeing that now. The only problem is we don't know if this spike is a spike yet. We have to give it a little bit of time. So we need to put this on our radar, be watching for this, watch the staples sector. And if it really starts to decline and stocks really start to go up and growth stocks do well, that might lead more to a bounce, which could really improve our overall technical picture. Okay, so what is our outlook then for Thursday? Technicals are still negative, even after having a short-term bounce. One day does not a trend make. And we're trying to figure out, are we just wearing off this the short-term oversold condition before we're getting set to go lower? There's some positive things that we can look at. We're out of the yield curve problem. Staples could be spiking right now, but we're also in a very negative environment. And because of this tug of war going back and forth, we remain in a trendless intermediate term range with the growth and value battle going back and forth each day. We really want to watch interest rates, whether they're going up or down. Some of the supply chain issues, my understanding is they might be, again, lessening some of the lockdowns in China, but what is that going to do to the supply chain issues in the US? We've got some big reports coming out on Thursday, retail sales, as well as the preliminary reading for consumer sentiment. And then I have a chart that I'll do in tomorrow's video to see how are people feeling about things right now. We have interest rates going up and sentiment going down. Is that going to continue? And then all of the different geopolitical events. And I won't read this list off to you because it's the same list that we've been dealing with for quite some time. Okay, what are our scenarios? What can make the markets go, or the S&P go down from here? Interest rates really start to spike up. We see some more inflation fears. We get a really hot retail sales number and people go, wait a minute, people are spending too much money. That's inflationary. Ah! Okay. We want to keep an eye on those things. If there's a real negative reaction to the retail sales as well as consumer sentiment, that could send prices lower. The technicals continue to be negative, so that feeds into our down scenario. And then, as I've stated a couple of times now, is this short-term bounce just to wear off the oversold condition? Right now, I'm saying yes. But if we see some follow through, if we see growth really picking up, if we see staples start to go down, that scenario could switch. But it's not even part of the scenario right now. It's just kind of on the back burner. What could make things go up from here? The yield curves being no longer inverted. Okay, and I didn't put staples on here because I'm really suspicious of that right now. I wanted to kind of give a little bit of time on that one and then see other areas in the market. Are they starting to improve? And then we use the staples topping and going back down more as a confirmation. Okay, the short-term oversold condition. Are we going to be able to continue that beyond just one day? Some of the moving averages and the pivot points may be providing support, but we also have to be careful because if we start going up, some of those areas might provide resistance. The scenario that we're in right now is number 3. The ADX continues to be below 20 and it's still declining. It hasn't really turned up. It's flattened out a bit, but it hasn't really turned up. And when we're in that environment, we see a real slowdown in price movement and things are pretty choppy. So what is our conclusion? The S&P continues to be negative. In the short term, it's negative, but bouncing after being oversold. Intermediate term, also negative. All of our oscillators are pretty much negative, and there's just a couple holdouts now that are also weakening. We did get back above the 50-period simple and the 200 exponential moving averages, so that could be somewhat positive, but can they hold above those levels? Long term, we are below the 200-day simple moving average, so that just builds a more negative picture the longer this happens. Then here's just a list of the different videos. You can pause this and if you want to. So thank you. I hope you have a really good Thursday. Remember, the market will be closed on Friday for Good Friday. So this will be a 4-day trading week this week.